Welcome back. You're watching Traders Corner, and as always, we're joined by Garth McKenzie, who is, of course, the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta, and welcome back.
Thanks. Nice to be back. Garth, we are going to be talking about the dreaded put option structure that you put into position a couple of weeks ago, but now this week with tweaks. And yet, before we get to that, I know that you want to look at three shares which kind of have carried the market higher over the last couple of weeks or so.
Yes, that's right. I want to basically look at the three heavyweight, or the three largest cap stocks in our market. That's BHP Billiton, Richemont, and Naspers. SAB Miller is also sort of vying for third place, but at this stage, those are the three largest cap stocks in our market, and those three stocks make up 35% of the top 40 index, just those three on their own. And I want to just put this out there to lay the background for what we're going to do today. Because as you said, we're talking about that put spread structure that I did about a month ago, and I'm actually adjusting the parameters of that thing slightly. But anyway, let's lay the foundations in the background for this week's trade. So on the screen at the moment, I've got a chart of BHP Billiton. And really what I just want to point out here with all of these stocks that I'm going to show you here is that they've had a very strong run over the last, few weeks really. Since we were all concerned about the emerging markets and what have you at the beginning of February, now all of those fears seem to have disappeared, and the markets have rallied back pretty much close to all-time highs again. And but if you look at these charts, look at BHP Billiton here, you can see that it is testing an area of fairly stiff resistance. And our RSI is in very, very overbought territory. When the RSI goes above 70, that's what we consider to be overbought. Okay. And if you look back in the past, each time that it's been up above 70 at these levels, you haven't really been very well rewarded for buying the stock at these levels. You've often seen it selling off after this. Or certainly consolidating. So the point I'm trying to make here is that Billiton seems to have run up into resistance here at 350 Rand. It has been struggling a little bit today, even after its fairly decent numbers that it put out this morning. And I think that there's room for a bit of consolidation here and possibly something of a pullback in the near term anyway.
So it's not just Billiton though, because you want to highlight Naspers and also Richemont.
Yes, that's right. So let's look at Richemont. This one is over here. Now, what's quite clear here is that the stock has been trading in a very neat channel since August of last year, and you can see it bouncing up and down against the bottom and top of that channel. Now recently we've hit up against the top of that channel at 110 Rand. There've been very long tails on the candlesticks each day of that stock, indicating that there's fairly heavy selling pressure at the higher levels. And that one also is overbought. It looks to me as if it's beginning to roll over, and maybe we have a move back down towards the lower end of that channel. So again, to me, there's not a lot of reward on offer right now for buying this stock.
And Naspers, I was talking to the Vunani guys last night, and they have a board up saying, don't short Naspers, because you would have done very, very badly if you had. Yeah,
that's right. I wrote a blog article recently saying that the trading arena is littered with the corpses of people who've tried to short Naspers. And that certainly is the case. And if you look at the stock here, notice again, it's pushing up against some resistance drawn through that overhead resistance line that I've put in there. Again, our relative strength index is very, very overbought at the moment. Also, what's quite noticeable here is that there was a very large gap in the trading action yesterday. And often these gaps do get filled, but it's quite interesting to note, especially after a push up like this, to see such a massive gap higher. Often that can be an exhaustion gap. Now, it's too early to say with any confidence whether that is indeed the case, but I think something to keep in mind, given that we've gapped up so hard into resistance there, that gap could well be an exhaustion gap, which might then not, start to see the stock coming off a little bit in the near term.
Okay, so ironically enough, maybe now is the time to short Naspers, but that's not the trade that you're going to be putting on. So Garth, this is sort of the scene that you're setting for an adjustment, as you say, to the put spreads option, which I imagine is kind of well out of the money, because basically you took protection against any downside in the market.
I did. So what I want to do is I'm going to look at this put spread structure, how we did it, and then I'm going to show you what I've done to actually adjust the parameters of it slightly. So we did this trade in the middle of January sometime. I think we've had it on for around about a month. And at the time, it looked like a great trade. I still think it would have been a good trade, but I think what I've done this week is enhanced this trade slightly. So let's go through it. On this chart that I've got at the moment here, these levels along the bottom axis are the levels on the top 40 index. This put spread option structure is a June contract for the top 40 futures. And on the left-hand axis here, we've got our profit and loss, obviously profit above the line and loss below the line. Now, what I did was I went long of 2 put options with a strike of 40,000. Right, I paid 11,000 Rand for each of those. So my net cost for both of them was 22,000 Rand. as you can see, I've got sunken capital into that put option there, and it then starts to make money below 40,000, but it only actually breaks into a profit below about 39,000. Now that put option will work all the way down to zero, but the market's not going to go to zero. Nobody's that bearish. So, and I don't think Clive Roth is even that bearish. So what's the point of buying something that's going to give me participation all the way down to zero? So what I did was I then sold away some of that downside, and in doing that, I shorted 4 put options with a strike of 37,500. Now, in that case, I receive premium. I receive 5,289 Rand for each of those options, meaning that my total premium that I've received is 21,000 Rand. Now, you can see that these 2 premiums more or less offset each other, all right, making this structure fairly self-funding. And the net payoff of the 2 options when they're overlaid with each other looks like this, where that blue line is. And effectively, I've got that big area of profitability where I've got a big green pyramid in the chart there. Below 40,000 and all the way down to 35,000, that is the area of profitability for this structure.
But of course, we're trading way above 40,000.
Well, that's the point. I mean, we're currently trading up here around about 42,500. Now, obviously, this structure is out to June. It's still a long time. Anything can happen. It's quite possible we might still go back into that area. But what I'm wanting to try and do is actually try and increase the area of profitability for this structure so that I can get on the right side of it from a higher level, closer to where we are right now in the market. So I've done some adjustments to this, and I've done the following. I've actually sold that orange structure, the 2 put options with a strike of 40,000 that I'm long of. I've actually sold that. Now, I can sell that out. There's still what we call quite a lot of theta. It's time value.
Okay, in other words, you can sell out these options even before they expire?
You can, yes, you can. And by doing this now, because there's still quite a lot of time value left in it, I still get paid relatively well for selling it out. So I sold them out at 9,423 Rand each, right? That means I've lost 3,170 Rand for selling that leg of the structure, okay? So if we take that off, that area, that leg of the structure effectively is gone. We are still now left with this short put option with a strike at 37,500, and that is my funding leg of the structure. Right, so I've kept that in place. What I have now done is I've gone along and I've bought 1 call option with a strike of 42,500. All right, and I've paid for that, I've paid 17,815 Rand. What you can see is because I'm long of this call option, I've sunk capital into this structure, I've paid away money for it, and it starts to make money from 42,500 upwards, but it only goes into the profit, somewhere north of 44,000. Now that's all very well. You might say, well, cool, but what's the point? The point is this. What I've done against that call option is I've gone short of 1 futures contract of the June Aussie 40 future at 42,500. So what that means, that dotted line is now the payoff structure for a short futures position. Obviously, as the market goes lower, so this future makes money. As the market goes higher, so that future will lose money. The point being that if the market goes higher, the call option that I've got there offsets any loss that I would incur on that futures position, on that futures short, right? So the net effect of these 3 legs of this trade overlaid with each other is as follows. It's that blue line that I've introduced onto the chart there. And you can see, whilst above 42,500, I've effectively paid away just about nothing. I mean, this really is pretty much a self-funding structure still. It then makes money from 42,500 all the way down. It makes its maximum profit at 37,500 on the index. And there I would make 52,000 Rand.
Okay, so in fact you would make more profit, but you've basically shifted it along. Previously you would have made more profits if the market had gone lower, but because now we're at a high level in the markets.
I've effectively just changed the shape of the payoff slightly. Remember that previously we would only make money below 40,000, whereas now we start to make money below 42,500. So I've given myself 2,500 points of extra participation. However, in doing that, I have also created an extra bit of tail risk for myself down here. And that red triangle that I've put on the chart there is what we call the danger zone. Now, the point is I make my maximum profit when the market is at 37,500. That's about, I think, 11 or 12% pullback from the high. Now, if the market starts to fall below that level, then I start to see that profit dwindling away. And below 35,800, that whole structure then starts to actually lose money. And it starts to lose money quite quickly below that level. Having said that, though, I can hedge out that risk if we see the market getting down to those levels. I think it's unlikely, but if it were to happen, there's methods I can employ to hedge myself. So if we were to...
Yeah, if you had to overlay this, for example, against where the market is trading at the
well,
moment.
I'll do that now. What I want to do here, though, is just show a summarized view of the different legs of what I've actually done here. So these were the original 2 legs of my trade. I was long to put options with a strike of 40,000. I was short 4 put options with a strike of 37,500. Now, what I've done is I've sold out the 40,000 puts. I've incurred a loss there of 3,170 Rand, not the end of the world. What I've now done is I've gone long and I've bought 1 call option with a strike of 42,500. For that, I've paid 17,815 Rand. The net premium now, if you take these 3 together, so I take the 37,000 puts, the 40,000 puts that I lost a bit of money on, and then this call option that I've paid away now. You take those 3 figures together, and the net premium is that I actually receive 171 Rand for this, right? So I'm actually being paid a tiny little bit of money to do this structure, and then it gives me nice downside. So if the market stays strong, I make 171 Rand, right? If the market starts to weaken anytime from now until June, that's when the structure starts to make money. All right, and the reason it makes money is because I've gone short of one of these June futures contracts at 42,500 against my call option. So now to answer your prior question, what does it look like if we overlay it on a chart of the top 40? Well, this now is the chart of the top 40 currently, and this is what it would look like. Basically, I've taken that payoff structure of the options and I've turned it on its side, so that it overlays against the chart. So here you can see, whilst above 42,500, that structure makes me a small amount, makes me 171 Rand. Yeah. Anything below 42,500, that structure starts to make money. It makes its most profit at 37,500. It then starts to give back that profit. Below 35,800, it would then start to lose money, and then we'd be into the danger zone, which I'd obviously then have to protect ourselves against. Yeah. But what I like about this structure is it gives us a very broad area of participation. I mean, we've effectively got, nearly 6,000 points of profitable area on this structure now, which is great. And the key is, if the market continues to go higher, doesn't matter.
Yeah. And you get your little 171 Rand, which is like a dinner at the Spur, possibly.
Or maybe McDonald's,
And Garth, it's quite interesting that a lot of your trades, which you've done well on this year, have been shorts, which is quite unusual for you. Generally, you tend to go long the market. So it'll be interesting to see if there is a bit of a pullback. So Garth, running out of time, so very quickly, what does the portfolio look like?
Right, it's looking good. Yeah, we up 15.5%. So 288,000 Rand is what we're sitting with. Those are all the trades that we've done this year to date. Not too much has changed from last week, other than the fact that I've changed the makeup of that option structure.
And then upcoming courses that you've got on the go?
Yeah, I'm busy in the next few weeks. I've got a course in Cape Town on the 22nd of February. That's this Saturday. There's still a bit of space there. In Durban on the 8th of March. Then I've got a face-to-face session on the 27th of February and an Understanding CFDs course on the 6th of March. So anyone that's interested in attending any of these things, please email me, garth@traderscorner.co.za, and then I'll send you the details.
And if we've completely flummoxed people, they can view this video again on your site and also on ours.
Correct.
Hopefully not. Garth, thanks so much, as always, and we'll leave it there, and we'll chat to you next week.
Thanks.
That's Garth McKenzie, founder and editor of Traders Corner.